taking a look at where tech startup valuations are, Q1 2022. We've got the data. Where are they today and where are they going? Not up, I'll tell you that much. So rising interest rates are only going to continue to rise. VCs are shouting from the top of their rooftops. Tech startups need to hoard cash and be prepared for a very long, dark period of time. So here's the data from end of Q1. So there's a lag here, right? Because when you actually have the data announced, there's, call it at least a 2 or 3 month lag from the time that if you're a startup, you get your term sheet from your lead investor, then you got to go get all the other investors in the deal, then you close that deal. And then there's usually an additional lag from when everyone actually finds out the terms of that investment, right? So that could be anywhere from 2 to 3 months to 6 months before you actually can have some visibility into the data of what's going on, right? So there's a lag here. That lag also exists in the real estate market, right? From the time you list your house, someone buys it, then you've got all the diligence and closing time and escrow and all the stuff that goes into actually closing that transaction takes months. And until then, that transaction is considered finalized and then is actually published in for others to see what the price of the house was, right? It's very similar to tech startups. Tech startups probably actually taking longer than a real estate transaction for these kind of private financings. So what's really interesting is if you look at late stage valuations, this is ending in March 31st, 2022. You actually already started to see a decline. You had a peak valuation, this is late stage, of about $1 billion, right? I mean, it's just insane. Pretty much doubled from 2020 to 2021. Your average late stage tech valuation. And you can see in 2019, that was maybe 350. So 350 to 500, looking at this ball here, this ball is the average, to $1 billion in 2021. But now in 2022, we just have 1 quarter of data. And mind you, right, those deals, some of them might have actually, the term sheets might have actually been written in, say, January of 2021 for it to close and then be recorded in the quarter itself of Q1. But also, I think you had a lot of those term sheets that were actually finalized at the holiday season in let's say, mid Q4, and then it got the holidays. But from the time it's actually closed and then reported. So this data, this decrease, a peak of $1 billion in 2021, then now $600 million trending by, this is end of Q1 2022. But that was, all those deals were done before the Fed started to raise interest rates, right? We interviewed this guy, Chris Leonard, author of Lords of Easy Money, 4 months ago, February 24th, 2022. There was maybe one 25 basis point rate hike by then. And then they'd signaled to do a bunch more. But, January, none of this was factored in anywhere to the degree of now where investors are at, right? So my point is, you had a 40% decline really off of deals that probably started in Q4 and then closed in Q1 and then, were reported into this study. You got to account for that lag. So for the deals that you're going to see for the Q2 data, which will come out in the next few weeks here as we get into July, that data is going to be on term sheets that were really being delivered and agreed upon in mid to late Q1, which we started to see what the Fed was doing with interest rates and the economy and lack of demand and all this stuff, right? This softening. But for what we're seeing right now, where you just had a 75 basis point increase, signaling another one on the horizon, this is now scary stuff. You were going to see this number, this late stage number. You're going to see this number come down in Q2 when that data comes out, and then Q3 data, I think, is when you're really going to see. Now that Q3 data isn't going to come out until October, right? Yeah, maybe 4 months from now. But that's the data of what's happening right now. So if I had to guess, we actually have no fear on this show of actually making more concrete assumptions. They might be wrong, but actually I'd say so far our track record is better than the Fed's. So I don't know. Yeah, maybe relatively we're pretty good. So from the Q1 data of 2022, we're still not below where we were in 2020. Okay. We're still not anywhere near where we were in 2019, which was at like 350. I think to me, that's really the anchor. Is you say, hey, should we be somewhere in 2020 land, 2019 land, somewhere in between 2019 and 2020? When the data comes out in 4 or 5 months from now in October, where will that average late stage tech valuation be for that quarter? These numbers are annualized. So Q1 is gonna buoy Q2 and Q3 on an annualized basis, right? It's going to prop it up. So for the year of 2022, where will the year of 22 land? Yeah, it probably won't go lower than 2019 on the year, right? Just because Q1 is still higher than all of 2020, right? So it's gonna be much harder for your overall 2022 average late stage tech startup valuation to be lower than 2019 at this point, just because you're off to a strong start. But I do think on a quarterly basis, if you compare the Q3 data when that comes out, which is actually the deals that are happening now, because the deals I'm seeing now, it's bad. I'm seeing retrades. I'm seeing startups with very reputable VCs. Series B, Series C stage startups. So these aren't baby startups. I'm seeing lead VCs call in the startups, give them a hug, and then kick them in the nuts and say, yeah, we'll still fund you, but like, we're going to need a 40% discount. And the startups are doing it. They're taking it. They're agreeing. That's a crazy thing. They're not saying go to hell. How could you do this? This is so disrespectful. I'm going to tell all my friends. No one else is going to ever do work with you. VC firm. Startups are like, okay, let's still do the deal. Give me the money. That's what I'm seeing. That information though, right? Those deals from the time they actually close, get recorded, get reported, won't be in my charts till October. Similar to the housing market, just a little bit longer. So now this is late stage. And so if you look at early stage, then early stage, and everything's lagged. From when the Fed does this, then public markets do that. And then, more illiquid transactions like private tech investments or real estate, then you see a trickle there in the late stage. And then eventually it gets to the early stage, tech investing. But right, if you look at this data for Q1 2022, things are still up, right? Things are still rosy. Look at our average, our little ball, it's up. It's higher than 2021, right? So this stuff hasn't even really made it into the early stage. Early stage, you're seeing early stage pre-money VC funded valuations for Q1 2022 average of like $250,000. That's insane. That's like actually insane. 2020 and 2019 were basically right around $100 million. 2021 was 150. Bam, then you go to 250. So again, those are deals that were happening in Q4. And then we're being reported on in Q1. That's some scary stuff. Those things are coming way down. I think those things, where is Q3 early stage going to be? Because the early stage is riskier, mind you, right? All of this, the riskier you are, the more painful it is for you to get the money. That's how it goes, right? So we saw this right in the early stages of the COVID, of when COVID hit, right? There was a flight to safety. Investors were fleeing to later stage tech startups that presumably were less risky, had, more of a proven business model, more existing traction. And so you saw a flight to safety in the early days of, what was that, like Q2, summer of 2020. By the time it trickles down, it takes longer for it to trickle down, which is kind of counterintuitive. You kind of think, well, maybe it would start riskier coming. But what you're seeing is kind of trickles down to the early stage, but then the early stage, the clawback as it trickles down to early stage is going to hit early stage, and the percent decline in the average valuation and number of deals done, dollars invested, all those stats are going to be relatively hit much greater than the later stage. Right? So if you're already starting to see these numbers in the later stage, those numbers are only going to be worse for the early stage. If you like this video, go check out our video interview with the chief economist from LendingTree, Pendahi. I think we interviewed him maybe last summer. And that was when no one wanted to admit even that there is asset price inflation, let alone real inflation. I got him to agree that there is asset price inflation, but he wouldn't agree to actual inflation. Go check out that video, right? And we talk about tech valuations, real estate market, like maybe last summer, 2021, somewhere around there. Go check that out.